Recording an accrued expense depends on the question. It can be a pretty simple question, but it can also range to being very, very complicated. And this video is going to take a while to get through, so I recommend you stop it, pause it, rewind it, and just take it step by step as we go. So, how to record an accrued expense? Well, first of all, why is a balance day adjustment even needed for an accrued expense? So this overall topic is balance day adjustments, and this is an example. And the reason why we need a balance day adjustment is because with an accrued expense, on balance day, an expense has been incurred, but not yet paid. So what we need to do is record two things. One, an expense. That is the economic resources that we've incurred or consumed by balance day. And then secondly, we're going to record a current liability. That is the amount owed to the other entity for the expense that was incurred but not yet paid for. Let's do a basic example. So let's say, you could get a question like this where it just says this. On the 31st of July, the business received its phone and internet bill for July for $400 plus GST, so that'll be $40 GST, and you have until the 14th of August to pay it. So that's how most phone bills work. You incur the bill or the data or the usage in July there, but you don't get the bill until the end of the month, and it says pay it by then. So basically what we're saying is by balance day at the end of the month there, we have an expense that we have incurred or used, but we have not yet paid for it. So what we better do is call that a current liability until we pay it. So how to do that? Well, we're going to do what's called a balance day adjustment. And in this case, what we're going to do is we're going to record a phone expense, which is an expense account. And just like with prepaid expenses, we are going to debit the expense. That phrase is really important with balance day adjustments. We always debit the expense. Okay, so we do have a phone expense for $400, even though we haven't paid it. But every debit needs a credit. Now, we're going to ignore the GST. I'll explain why in the next example, so let's forget that. But we're going to say, well, there's got to be a credit here. Could be to bank. If we paid it, bank would go down, but this is the opposite of that. I haven't paid it. So we're going to create a brand new type of account called accrued phone expense. And even though it's got the word expense in it, it's actually a liability. So we do a credit there. Kind of like accounts payable, what we spoke about in the last example. Accounts payable is different. With an accounts payable, you're buying an asset called inventory. This is not an asset. This phone expense, it's an expense. So that's why we need a different account called accrued phone expense. So how will we do that? Well, we do it in our friend the general journal. We just did a debit to phone expense, that's our debiting the expense, and we did a credit to accrued phone expense, and then we do it some sort of narration. Adjustment to record phone used in July or something like that, memo 1. And the point is there, all our balance day adjustments are always done in the general journal. So then what happens? Well, we've got this liability here, right, called accrued phone expense, which is a liability, just like accounts payable would be, or loan. It's just sitting there with a balance. We got the bill, and then on the 14th, we're going to settle that or pay it. So what will happen there? Well, when we pay it, there'll be a couple of things. We are going to deal with the GST now. We'll talk about this more in the next example, but yeah, so what we're going to say is, well, what's happening now? First of all, after I pay this, I don't owe the phone company anything, so I better decrease that with a debit. So I've got a liability called accrued phone expense. Here it is here. It's going down, so that should be a debit there. So that would take care of that one. What else? Well, I'm going to pay the GST now. So the GST will be 10% of $400, so that's $40. When I pay GST, it goes to the GST clearing account. It decreases my liability, so that would go there. And then lastly, well, how am I paying for it? I'm paying for it with cash or bank, which is an asset. It's going down, so that would be a credit. So there we go. Do a little narration. Payment of phone bill for July, be paid 101, or however we paid it, and we're done. So that wasn't too bad. That was a reasonably straightforward example. So maybe we get one like that. But maybe we get a really complicated one where we're going to need like a few more steps to do. So let's do that. And again, this is going to take some time, so feel free to stop it, pause, rewind, and rewatch this video, okay? Because we're going to do absolutely everything. It's kind of the worst case example, this one. So example number 2. First of all, why don't we say during the month, like we don't always get our bills at the end of the month. My phone bill every month comes in on the 27th, not the 30th or the 31st. It's so annoying because there's like a little bit of a delay between, the full incurred amount for the month and what I've actually paid. So let's deal with that and say on the 23rd, we get our gas account for this month and it's $700 plus GST. But the problem there is September's not over. So for the remaining 7 days of September, we consume another $200 of gas plus GST, but we haven't paid for it. And the reason we haven't paid for it is because we won't get our gas bill until the 23rd, 24th of the following month. And then it's $600 plus GST. There is so much going on there. So we see this question on the exam quite a bit. So let's just break it down nice and slow. First, we're going to need some steps. Step 1, record the accrued expense in the general journal, but do not record the GST yet. That's our debiting the expense, most important step. Step 2, let's post that to the general ledger. Step 3, let's close the expense account to the profit and loss summary account. Step 4, let's balance the accrued expense into next period. And step 5, let's record when we pay the accrued expense, and we will deal with the GST there. So we didn't deal with it with step 1. So there's so much to go there. You're not going to remember that just from me talking about the steps. So let's do it. Let's just take, or sort of break this down into what's happening. So first of all, in September, we got our bill on the 23rd, and it said for September, you have incurred $700 of GST, and we paid it on the same day. Okay, so there we go. We have paid $700 of gas plus the GST. That's gone. That's done. Finished. Okay, that's pretty straightforward. The problem here is for the rest of September, so another 7 days, we're going to incur another $200 of gas, but we're not going to pay for it by the end of September. So that's our balance date. And the reason we're not going to pay for it is because usually they probably won't send the bill until like here, let's just say the 24th of October. They're going to send the bill there. And the problem now is, well, it's actually not, it's $600 plus GST. It's not $200 because that bill covers from the 24th of September. So that starts here and it goes all the way to the 24th of October. So this is going to sit there, this $200, as a current liability until it's paid on the 24th of October. So I guess what we could say is, well, if the bill's $600, right, and we know $200 of that is for the last week of September, that must mean the other $400 is the expense for October, from the 1st of October to the 24th. So that's what's happening. That is really, really complicated, okay? Half the battle with this question is just figuring out what's going on, okay? So it often helps to draw these little time sort of chart table things and sort of break down and plot where the money is. So we could go the $700 for September, we already used it, already paid for it, that's fine. But then we've got this $200 incurred we haven't paid for from September, plus another $400 in October that we haven't paid for either. All right, so let's just deal with it step by step. So the first thing is we can actually deal with this 23rd September paid our account for $700. That's easy, we've done that before, okay? All we've got to do in our general journal is go, well, first of all, I've got a gas expense, $700. So that would be a debit. I paid the GST, $70, so that's a debit. And it came out of my bank account, so that's a credit. We've done that before. So the point here is, yeah, that's, so you go, well, hang on, this is not an accrued expense. It's not correct. But, yeah, as part of doing an accrued expense, we might have to do this beginning bit. And it's pretty straightforward. So let's look at the gas expense ledger. That's the one we're going to have to deal with. What just happened? We did a debit for $700. The reference was bank. And there we go. We've done that before. So nothing too new there. Where we do get new is with this next bit. So for the rest of September, we're going to consume another $200 of gas but not pay for it, and it's sitting right there. And the problem is, let's look at our September gas bill. It's going to be $900. We've paid $700, but there's $200 we haven't paid yet. We're not going to pay it until the 24th of October. So what we better do is step 1. Let's record the accrued expense in the general journal, but do not record the GST yet. That is called debiting the expense. What are we doing? Well, debit the expense. We've got the gas account, gas expense. What do we do? Well, it's going up. So that's a debit. So we're going to do $200 to the gas expense account. And that is what we call debiting the expense, that really important bit. Now we're going to ignore the GST now. We're going to do that later. So what have we got? Well, this is the new topic. We're going to create a new type of liability called accrued gas expense. It's going up. So when a liability goes up, that's a credit. So we'll do that. And there we go. We've done step 1. Do a little narration, adjustment to record gas used, memo 1. Step 1 done. Step 2, let's post that to the general ledger. What does that mean? Well, I mean, here's our journal here. We just got to send it to the actual ledgers. So we've got the gas expense account, and we'll just note here, look, it's not blank, is it? Because on the 23rd of September, we paid $700 already. So that should already be in there. So all we're doing now is adding this in, debiting the expense, and putting that there. Okay, so really the gas expense for the month is $900. The $700 we paid, and the $200 we haven't. And then we're going to go to this liability account called accrued gas expense and do a credit there. And we're done. We're just going to do our references. I always leave them till last, but do them in whatever order you want. So the first one is, what's my reference here going to be in the gas account? Well, I'm going to find its matching credit here. That's in an account called accrued gas expense. So that's what I'm going to write. And then over here, where's my matching debit for this? It is in this ledger here called gas expense. So I'm going to write that there. Step 2 is done. Step 3, now we're going to close the expense account and profit and loss summary. What does that mean? It means that we know, right, there's this ledger called gas that will have all these revenues and expenses for the month of September. They cannot go into next period. We're going to close them down because they're specific to this period, which is September in this case. How do we do that? Well, I'm going to create a new ledger called profit and loss summary. And what am I going to do? Well, in my general journal, I'm going to shut this gas expense account down. I'm going to do it with a credit there for 900. Now you see my general journal, I've left a line. That's because I always do the credit second. You can do them in whatever order you want. It doesn't matter. But the point is, I just went to the gas expense account and did a credit of 900 because I've got to reset that to 0. So we do these numbers underneath here in red just to say that that ledger now equals 0. Every credit needs a debit though. Where will the debit go? It will go to the profit and loss summary account right there. Let's put my references in. Oh, sorry, do a narration, closing of expenses, a little reference, and we're done. Step 3. But then we get this bill. Okay. Oh, sorry, step 4. A little step I just quite often forget. Just kind of because you look at it and you go, I don't even know whether I need to do this. But we better do it anyway because there is a liability with a balance in it. And we should always balance liabilities, even though there's only one number. Who knows on the exam? So what we'll do is we'll add up the bigger side, which is clearly the credit side. Then we write balance at the end of September there. And then we carry that forward to the next period. So in other words, we are saying going into October, the balance of the accrued gas expense account is a credit of 200. So now that's step 4 done. Then we get to step 5. That's the tough one. Now, we've got to figure out what the hell's going on. So let's just go through this. I've got this $200 I've incurred for the last week of September. I haven't paid for it yet. I've already recorded that, so we're good with that. Going to get this gas bill here, and it's going to say $600 plus GST. And it's going to go from the 24th of September to the 24th of October. Okay, and there it is. Okay, and I'm going to pay it on the same day. But that $600 is actually two things. It is the expense from last period of 200. So that's my accrued expense. And then it's just the regular expense for October, which is 400. So what I better do is record the payment of all that, and I am going to do the GST now. So this is our last step. So hang in there, we're nearly done. All right, what have I got? I've got a gas expense ledger which is nice and blank. Why is that blank? Because a couple of steps ago, I went through and shut it down to profit and loss summary. So it's nice and clean. That's what we want. So we can calculate our profit fresh. I've also got this accrued gas expense account. This is a liability and I balanced it last step. I said on the 1st of October, the balance of this is 200. And let's go. So the first thing I've got to do, we can do this in any order. I'm going to first of all say, well, there's this accrued gas expense here. I owe $200 to the gas company from September. I'm going to pay that. So what's that? That's a liability and it's going to go down. When a liability goes down, that's a debit. So that'll go there. Okay. Accrued gas expense debit, 200. And now this balances to 0. It's gone. It's clear. I don't owe them anything anymore. Then the next account is the gas expense. Isn't that just the same thing as this one that I just did? No. This one here was paying off the old gas from September, which was a liability. However, $400 is an expense for October. When we have an expense going up, that should be a debit. So I will go here and do a debit there of 400, and there it is. And that way, it's because we've reset this back to 0, it's nice and clean, and we've separated September's gas expense from October's gas expense. Then what else we got? Well, we're going to pay the GST now. So we said step 5, now record the GST. 200 and 400 is 600, so the GST will be $60. When I pay GST, that's a liability going down, so that will be a debit there. And then lastly, how am I paying for all this? Well, I'm paying for it with cash from the bank account, so that means that account's going to go down. When an asset goes down, that's a credit, so the total would be all these numbers here, and I'll put 660 there. And then, better do a narration, payment of gas bill, BPay 45, and that is everything. So that was really, really complicated. So just to go back through this video, we had 2 examples. We had the easy example, example 1. So make sure you understand that. And we hope that's the question we get. But maybe we get this really complicated question where there's all these mixed amounts. That was example number 2. So go back, stop it, rewind it, pause it, and go through it until you understand how to process all those 5 steps.